Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about one of the very small cap company that I have found out which looks very attractive, and this is Privilege Communication. And this is a very interesting company of around 500 crores market cap, has been doing well for the last few months. Let's understand about the business and let's understand as to where the stock might be headed in the next 1 or 2 years. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Privilege Communication, here's a small request. Kindly support me on Patreon, and must do that will help grow the channel, help you also ask me questions and link out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, once you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, or a number of stocks you're holding, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the WhatsApp membership or on YouTube as well. Now, about the company established in 2016, Privilege is an advertising company with core competence in exhibition and event management. So, this is a company that goes into event management and other domain. And basically, this business did reasonably well till 2016-17, and then we had a little lull because of the economic recession that India faced between 17 to 1920, and then the pandemic hit us, so the business completely went down sharply. It has national and global presence with presence in Europe and US. High ROE business making decent profits. The market cap of the company is around 500 crores. It is well less than 1000 crores at the moment. These are the financials of the company. So these are Q1 numbers for FY23. So sales were pretty good. In fact, this time around, sales were around 20 crores versus 3.6 crores in FY22. So in June 21, that's what I'm saying. So profit of around 7.6 crores versus half a crore. Things are coming back and coming back into fashion big time in terms of event organizing events and you can say exhibitions. A low debt company, there's decent promoter and institutional holding. ROE of around 50%, and operating profit margin has dipped a bit. It's not quite 52% when the results came out. It's around 43-44%, but that is also pretty strong. Very few companies currently in the market boast of such margins on the top line. So if you look at the results at a glance, exponential growth year on year, as mentioned by the numbers as given right now, decent growth, quarter on quarter growth of around 18% in profitability as well as in sales. There has been a 13x growth in sales since June of 2019. So if you look at June 2019 numbers, they had sales of around 1.5 crores, which has grown to around 45 crores, 50 crores. This time around, margins are of around 43-44%, as I mentioned, which is very strong. Reserves have expanded from a 7 crore negative to around 9 crores in 3 years. That has also gone pretty good. And currently, it is trading at 5.5 times FY23 sales. These companies, if you look at the global structure, then they trade at 8 to 10 times sales. This can expand here as well, and I think demand to remain consistent going forward as things open up completely. So overall, sales figures should only increase going forward, and based on that, the stock could end up trading at much higher valuations that it is trading at the moment. So if you look at the revenue picture, around 60 crores of revenue in FY19 and 20, then it dipped to around 45 crores. But I think this time around, with the kind of revenue that has come out for, you can say, the June quarter, if you go back a few slides, you'll know that around 20 crores of sales had come out in the June quarter. And normally, quarters in, you can say, December and March are the big ones. So I think December quarter numbers would be highly awaited, and let's see how that goes. I think we are going to cross 60-65 crores easily in FY23. Based on that, uh, the valuations look pretty good. I think we'll be closer to 75 crores, if not more, in terms of sales figures for FY23, and then we'll take it forward from there. In terms of profitability, this is where the big growth has come in. So before the pandemic, they had a profit of around 3 crores, which has grown to around 12 crores at the moment, and I think it's going to expand even further as things have opened up and people are looking to travel even more, and there will be more exhibitions and events that are going to be organized all throughout India as well as in Asia. And in the margins picture, they had very meager margin, around 7%, 11%, 12%. That has expanded to around 35 and now 44% for FY22, and it's growing even further. I won't be surprised if the margins did come out to be around 50 to 55% going forward. So some of the important pointers in terms of the business, they organize exhibitions nationally as well as internationally, and there are projects that are in the US, China, South Korea, Africa, Europe, and in the Middle East. So there are projects globally as well that are taking place at the moment. Margins around 45-50% is pretty strong, and the company has organized over 700 events and exhibitions all over the world so far, which is quite commendable. So it is a very experienced company altogether that we are looking at. Is although it is a micro cap, small cap company, but it has a lot of experience. Operated and managed the White Run Resort in Kutch during the Run Festival, and normally they do that every year. They get a lot of you can say revenue from there as well, and they have recently entered into the field of real estate as well, real estate marketing. And as we understand, real estate industry started to perform a little bit post the pandemic, and then there has been a plateau, but I think over a period of time that will grow even further going forward. They're looking to venture into TV broadcasting as well. That will be interesting to see. And they are looking to organize international exhibitions on ports, energy, and tourism, and I think that is also going to kick in a lot of revenue uh, uh, per year for the company that would come in, that was not coming in earlier. So that's why the revenue growth may just continue to foster. So why I believe this can be big exhibition events to only pick up from this year onwards. I think from FY23, which is this year, I think exhibition and events business should only pick up, and these things will accelerate going forward in the next 2 to 3 years. Company has expertise on organizing big events globally, as I mentioned, around over 700 events they have already had successfully managed. So this is something that is going to be big over a period of say 5 to 7 years. They'll gain more traction once a global economy picks up next year. I feel Europe should recover by March, April next year. So FY24 could be big from European point of view as well as from Middle East point of view. Remember that the World Cup football is in the Middle East, probably in a few weeks time, in a week or so. I think things will pick up in Middle East as well next year onwards. High margin and low cost business, that is also a very positive thing, and valuations are attractive compared to the prospects that it has. I think valuations are very attractive even now, even with the run up, even with the stock doubling in the last 5 6 months, look pretty good. And last 3 year average on an ROE basis is around 55%, which is pretty strong. So overall, as I mentioned, there are a number of positives for the company and for the business, and it looks like that we are in for a good upside over the next year or so, year or 2 years. But there are some risk attached with the business, so let's understand those. So some of the risks that are attached with the business, it is a micro cap company, so there is a lot of volatility of the stock. The low, I mean, there's a low float to the stock, so you have to be careful on that front. Numbers can be volatile as business is seasonal in nature. As I mentioned, December and March quarter are pretty big, and then the couple of quarters go by without noticing. So there could be up and down number. The numbers differential between two quarters could be big. Global turmoil, if that continues, that's a risk. I think if things do not get better in Europe and US, then and there is a lot of expenses with respect to organizing events, and if that inflation remains high, and you need to understand about the currency fluctuation as well. So these are some of the bigger factors when we look at the global picture. When you're looking at a stock with such stature of being only 400-500 crores, it is looking to it is looking stretched after a huge run in 2022. So you have to understand that the stock has moved from 70-80 rupees all the way to 250-260. uh, so there has already been a move of around 3-4x. But the valuations look attractive even now, but it is a risky bet after such a move in 1 year. It could just go on consolidating for months. So a small cap sell off in the market could also trigger a lot of sell off in the stock. The stock could easily correct 20-30% after you buy into it, because if markets have run up, any kind of correction will hit hard on smaller companies. An increase in debtor days from 79 to 111 is also a cause for concern, because normally these companies should be having reduced debtor days rather than increasing in debtor days. So that is another thing to look out for. In terms of valuations, I believe expected FY23 EPS to be close to around 12 rupees. I think it will be around 12 rupees or so. It is currently trading at around 20-22 times between that FY23 earnings, and this is where the stock is attractive, because in FY24 I see traction in this kind of a business. So I believe in FY24 they should have an EPS closer to, if not more than closer to 20 rupees. I think there could be a growth of 40-50% over this period. And if they have an EPS of around 20 rupees, then the stock is trading very attractive at around 12-13 times. I think it should be trading at around 28-30 times. So the stock is headed towards 600. But my opinion here is that do not rush to buy into it. Let it consolidate, decline a bit, and buy on any 8-10% decline from the current levels. In terms of technicals, it is looking very strong on charts, and the stock is not willing to correct. It corrects only 3-4% and then moves up sharply. Short-term support is around 220-225. So any kind of 10%, 12% decline could be very good levels to buy into, because long-term support lies around 180. It has taken out most resistances, and the next big up move is expected above 270. It is around 250-255. So it could go either way. It could go down 10% from here or go up big time post 270. But I would suggest that you buy on any 6 to 8% decline. So from a 3 year point of view, it's a buy at these levels, and on declines, I mean on staggered manner, you can buy and keep on accumulating till 220. I think this can end up being a multi-bagger, not just 2-3x, but going forward, if the numbers continue to be good, it could be a consistent performer over the next 4-5-6 years. A decent long-term stock, but again have only 3 to 5% and no more than that into such stocks. So this was a video on pre-veg communication. Please like and subscribe my channel, hit the bell icon so you can get videos straight away when I post it. Can you support me on Patreon? Thanks a lot for watching.